Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So as I record this message, it is Friday afternoon. The markets are about to close. If they hold on to where they are right now, we might actually see some gains for the day. But the Dow has swung from its lows to its highs over 1,000 points today, much like the 1,000-point losses it experienced earlier in the week. So I have been getting a lot of questions about, what's going on and what should we be doing right now? And so to explain what's going on, you have to understand that much of the volume, the selling volume that's going on right now is coming from really large institutional investors, hedge funds, pensions, people that have a ton of money in the market. And they were using some products that were a little complicated and had maybe more risk than they understood. And as volatility increased last week, we saw a snowball effect, which basically started with some people experiencing some losses that caused them to have to sell some things, which caused some more losses that then started to require that people cover what are called margin calls. And we really haven't heard that term since the late 90s, since the dot-com bubble. But a margin call is when you've borrowed money to invest in the market and the market goes down and the people that lent you the money want their money back. And that's happening right now. There's a handful of investments where the normal volume has been tripled each day for the last several days. And that extra volume is really just these large investors having to sell into the market to cover their borrowed positions. So this is not a fundamental problem. It isn't like the dot-com bubble, because back then you had companies that were generating no profit, had no earnings, and their prices would go up 20 points a day. So at some point that bubble had to burst. But the economic data that's available today says that we're not there. This is not because of a fundamental issue in our economy. This is simply because of a structural problem with some investments that I fully expect in the coming months the SEC to take a look at and see if there's something that needs to be done about them, because this kind of volatility is just not fair to investors when speculators and investors, especially when speculators are so large, those speculators cause harm to average folks. So I'm not sure where it's going to go, but we'll be watching it really closely. We think you should too. So if you're looking behind me and you're wondering why is he standing in an empty room, we are actually preparing for our State of the Market update next week here in Santa Rosa on Tuesday and Thursday at 11:30 a.m. and 4 p.m. So anybody who sees this video, if you'd like to attend the event, please give me a message or give us a call, and we'll happily reserve a spot for you, assuming we still have space. But that's it. So that was your update. Have a great weekend. We'll be back on Monday with another Uncommon Sense update. Thanks for watching.